Everyone, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 11th of May, 2018. Hope you had a good week. It certainly was for the markets. As you can see, markets are, for the most part, back to positive for the year. Only the biotechs and the bonds are down year to date. So let's take a look at the action. What we're going to do is take a look at the indexes through the ETFs, and then we're going to take a look at some individual stocks and one particular pattern that's been working well recently, and some stocks that are still poised for some gains, it looks like, in the near term. The S&P 500 did make it past this downtrend line, so we can just erase that for now. And you can see we are clearly above the year-to-date volume-weighted average price. Last time we got up to that level and it was extended, it pulled back pretty hard, found support near that rising 200-day moving average in the 259 level we mentioned last week. But for this week, it continued to move higher, once again showing why we don't want to sell short with a rising 5-day moving average. As I pointed out on Twitter, the measured move that would take this as point A to point B and this the pullback to point C, we add the height of that pattern right here to this level, and that gives us approximately 274.12 as a potential upside level. Now, we don't want to just put in sell orders up there, and we certainly don't want to sell short up there. It gives us an idea of where this market has the potential to go in the near term before it might slow down. The fact is, we still have a rising 5-day moving average, higher highs and higher lows, and this week we found support right above that rising 5-day moving average. The volume weighted average price from this low, so since the beginning of this new move, is right now at about what is this level here, 270 and a half. So next week we're going to start to look for that to be our first potential level of support, and of course the rising 5-day moving average. But right now things are looking certainly a lot better than they have. The indecision that we've seen all year with the volume weighted average price off this peak we had been below, and we had been spent a lot of time below the volume weighted average price levels from these lows as well. So ideally, if we see a pullback down towards 270, 269 and a half maybe, that will hold as support. We have most of the earnings reports out of the way. We have the Fed out of the way. So realistically, only tweets from our leader can potentially screw things up here for this market. But don't chase things. We're extended here, and risk management is always job number one. The NASDAQ has been the leader, and it continues to lead. It broke beyond this little peak right here after a slight slowdown in front of it. We have been above that volume weighted average price for the year all week, and we're above a rising 10, 20, and 50-day moving average. A lot of people are looking for the market to maybe fill this gap, which seems reasonable. And there's nothing here to say that it needs to pull back from there. The real leader has been the Russell 2000, and the Russell 2000 is back up to this level that we have been talking about here the last several weeks as a potential level of upside to look for the market to retest that 160-ish level. We also spoke of the measured move, which was basically we can call it 148 to 158, and then add that to this 152, giving us a potential for a 162 upside objective here. And that, of course, would put it into all-time high territory. You can see on a weekly basis, this may, in fact, 159.81. The close on this prior week over here was 159.60. So we closed at an all-time weekly high for the Russell 2000. That's pretty impressive here. So the energy had been building. It had found support at that year-to-date volume-weighted average price, and up towards 162. Maybe then it begins to pull back, but it's getting a little bit extended here. So be careful about chasing. Same is true for the semiconductors. They made it up through their year-to-date VWAP and through the 50-day moving average. I wasn't expecting that, but I certainly wasn't going to short it. Not when we have a rising 5-day moving average like we have in here. So putting it back to a daily time frame for the semiconductors, maybe this market is going to poke slightly through this level and then perhaps come back and find some stability in here, and then who knows, maybe it can continue to move higher. The longer term trends with a rising 200-day moving average are still higher in these markets, and now we're getting intermediate term a little bit extended, but certainly more bullish than it's been, except of course the biotechs. Now they had a good day today to get them positive for the week, but still negative year to date, still below a declining 50-day moving average, below declining 200-day moving average, below the year-to-date VWAP. Maybe it can continue up towards this level, but overall, from a risk perspective, it came down to this prior band of resistance, found some support in there, but it's really more neutral at best. But with a declining 10, 20, 30, 40-week moving average, realistically, there's nothing there to suggest that it's a reason to be a buyer in there. The financials came right up to their year-to-date volume-weighted average price. That's the purple line right there, and they backed off a little bit here today. So if they continue to pull back a little bit, we're going to see this 10 and 20-day moving average start to catch up with the 50-day moving average. So maybe a pullback down towards 28 would be reasonable. I mean, I think it's reasonable to pull back down towards that 28 level. The people who buy these extended breakouts, often regret those purchases, and we start to see some profit taking down towards this level perhaps, and then it's time to reassess from there what could be next. We're still suspicious of this group with that declining 50-day moving average and the year-to-date volume weighted average price overhead, but they made a lot of progress this week to at least clear up the doubts about its ability to hold up. If it had done something more along the lines of this, then perhaps we would be into for something more serious. So a nice save basically in the financials this week. Let me talk about that pattern I was mentioning. VMware was one that in Alpha Trends we had gotten involved in right here. And the pattern is that the stock gets back above its year-to-date volume-weighted average price as well as the volume-weighted average price from the peak. The buyers gain control, and then we have opportunities for some great swing trades. We saw that also in Home Depot that we were involved here. Do be aware though, earnings are due next week for Home Depot, the 15th. You can see that right up here. The next earnings report is due. But the fact is, it's above that 50-day moving average. It's above the year-to-date volume-weighted average price, which comes in right here, and it's above the volume-weighted average price from the peak. When you back it up to a weekly time frame, that was a nice pullback down to the 200-day moving average, and the stock is continuing. It gave us a good low-risk entry in Home Depot, as it did this week in Dunkin Brands, DNKN. Very similar pattern. This is where we sold a little bit of the stock because we were expecting maybe it would pull back a little bit. We're still long some with our stop. We currently have our stop. We had it under here. Our stop right now is in this area, and we purchased it over at this price. But Dunkin Brands, same story. It is, it held above the year-to-date VWAP and the volume-weighted average price from this peak, and the weekly time frame still in a longer term uptrend. So look at, for instance, McDonald's, MCD. McDonald's, nice pullback to the longer term moving average. In fact, the volume weighted average price from the 16 low is really where it found that support. Down to the daily time frame, we're above a 50-day moving average, which is rising. We're above a 200-day moving average. We're above the volume weighted average price year to date, and we're also above the volume weighted average price from the peak. As I mentioned to subscribers, we look at these as swing trades, but certainly, stocks like McDonald's, if you're looking to be a longer term investor, if you buy it with a stop under here, that might be a good place to own it. We own it right in at about 165, and then we've got let's see. What is GDI? This one was on our list to buy today. We're looking actually for a pullback a little bit. The weekly time frame, same story. Pull back to that 200-day. It took some time. The buyers regained control. It's above the volume weighted average price from the peak, and year to date, it's above a 50-day moving average. I was pointing out this little inverted head and shoulders pattern. This being the shoulder, this being the head, and this being the right shoulder. It broke that neckline, and now down to a 15-minute time frame of just the last couple days. We're looking to buy it somewhere in this general area. And then Ross Stores is another one, ROST. Same type of story. It didn't have quite as deep a pullback, not down to the 200-day moving average, but certainly that has been an opportunity here where the average price from the peak and from the year to date those people are now feeling good, and those levels are holding as support. So we have a change in the sentiment from the sellers regain control back and forth, and now the buyers are back in control. And Ross Stores looks like it should be able to continue to move higher. Boyd Gaming is another one, BYD, not Z, whatever I just typed in there. But Boyd Gaming, look at the weekly chart, same type of pullback. We're here fighting this year-to-date volume weighted average price. The volume weighted average price off the peak is just below. I think that if you spend a little bit of time below this level, that maybe it kind of does something like this in the next week or so. And then Boyd Gaming looks like it should be heading higher, as does Lyondell. Lyondell on the weekly time frame pulled right back to that weekly 200, 40 week 200-day moving average. On the daily time frame, it got extended the last 3 days, so I certainly wouldn't want to be a buyer here after it just came from 104 up to 114. Instead, if it's to settle down like this next week, then perhaps it would be ready for a next leg higher, then looking to buy somewhere in here with a stop underneath whatever the most recent relevant higher low would end up being in this case. Let's talk real quickly about Bitcoin and we'll wrap it up. I'm not going to talk about gold because it's still just kind of dead. It needs 1380 plus and it's at 1318. But Bitcoin, I had put out a tweet on this about why we were interested in starting to look for a place to buy in Bitcoin. And this is for a riskier portion of your assets. That is, buying as it pulls back. Well, here it's pulled back from 10,000 down to this 8,500 level, which is close to the rising 50-day moving average, and it's close to the 50% retracement. So this is the zone I was talking about, because again, we also have a measured move in this market, where if we take a look at the from this peak near 9,900 down to this low here of 9,000. That's 900 points. We subtract 900 points from here, and that gives us about 8,500 where we are. So this is prior. This prior little resistance in here has the potential to become support as well. So for reasons that this general area is a place to start to look for a speculative purchase of Bitcoin on a pullback. That'll do it for me. Have a good weekend.